Hey everyone, Ahmet here from Down to Trade. It's Monday, September 12th, 2022, and today was a fun day to start the week. Before we get going, I'm glad to announce we just broke 75% return for the year so far. So kudos to everybody in the room. We're certainly on track to break 100% in the fourth quarter. Also, I wanted to throw out a quick reminder about our 50% discount that's going on right now for the Down to Trade room. Remember, with your membership, you'll get daily access to our live trading room where our community of traders hang out and discuss real trades we're making as we make them. It's just really neat experience to hang out with other traders who think like you do and encourage each other through the ups and downs of the market. And they actually help each other stay strong in a position when you otherwise would likely have been scared out of a position and missed out on some good profits. Today was actually a good example of that, but we'll get into that in a little bit. Also, each member is going to enjoy a free 30-minute one-on-one coaching session to talk about whatever you want. If you're not really sure what to talk about, don't worry. We'll talk and we'll discuss and narrow in on some of your goals that you might have and what you can do to reach them. Plus, each member can download a free copy of my Down to Trade journal, which I custom built just for this strategy. All of this is going for 50% off of our regular price. And yes, that 50% discount will never change as long as you keep the membership active. Be sure to take advantage of that discount before it goes away. Okay, so let's get down to trading. As you can see here on our charts, we entered a bull put spread about 12 minutes into the day. Now, looking at this opening move, we can see price moving up while the tick was quickly dropping. This signaled to us in the room that a bullish move was more likely. However, today was a gap up day. Taking a quick look at the daily chart, we can see the index gapped up above yesterday's green candle, which signaled a possible retest early in the day. And that's really what happened. That's exactly what happened. So we were expecting a pullback in the first 10 minutes of the day, but obviously we weren't sure how far down it would go. But once it did touch down on the 10 EMA here, we began looking for a bounce and our entry. At 9:39, around right here, I initially called out a bull put spread at the 40.35 by 40.05 strikes. But unfortunately, we missed it by about 10 seconds and it was gone. It took off. So I quickly began looking for another entry, and we all made it in at around 9:42 in the morning at the 40.40 strikes, 40.40 by 40.10. We got in for around one. We got in for $1. Now I knew we had some good resistance at the 41.13 area, so I did announce that I would like to get out at around 41.12 in order to avoid any rejection at that level. It took a couple of tries to get filled on our take profit, but we finally exited at 55 cents, leaving us with a net profit of 40 cents. Remember, $1 net credit minus 55 cents debit minus roughly 5 cents in commissions and fees gives us our net premium capture of 40 cents on that first trade. Now remember, with the VIX opening today at 23.6, our daily goal for the day was 1.25% return on capital with 70 cents premium capture. So we're looking for 70 cents premium capture for the entire day, and we only captured 40 cents on this first trade, meaning we needed to capture another 30 cents after commissions and fees. That said, my rules did allow me to get back in after 11 a.m., and we were already out by 10:15, so we had some time to kill. We got out right here at 10:15, and 11 o'clock was roughly right around here-ish, right around here. So my rules say I can get back in for a second trade after 11 a.m., but President Biden was actually set to speak today at 12:45, so that was going to be a long time from then. So we had several hours to kill. I definitely didn't want to get back into the trade while President Biden was speaking, and I certainly wasn't going to get into it prior to his speech. So we had several hours to kill. So we all just kind of took a break for a few hours while I left the trade room open so members can kind of hang out and talk if they wanted. I actually got to go pick up my daughters from school, and I got to go hit the gym. I got back to the office at around 1:30, and the traders who were left were actually eager to pick up the remaining premium to reach their goal. And actually, so was I. So at 1:55, we took another bull put spread at the 40.80 by 40.50 strikes for 55 cents. Now, knowing I needed to capture 35 cents in order to net 30 cents, I had to exit this trade at 20 cents. So, taking a look at it, remember, we got in this second trade for 55 cents net credit. Now, I needed the end of the day at 70 cents, so I needed a net premium capture of 30 cents. So, with 55 cents net credit on the trade, I needed to exit this trade at 20 cents minus the commission and fees of 5 cents. That would give me a net premium capture of 30 cents or a net premium capture on the total day of 70 cents, leaving us with 1.25% return on capital for the day. And that's exactly what happened. After a little bit of wishy-washy action on the market and some increased implied volatility, we exited our second position at 308 for 20 cents. We met our goal and we actually weren't in the market for very long. Plus, like I said, I was able to actually go get in a killer workout at the gym. Now, right here at around 2:30, the market began to test our resolve. Because of increased IV, we had a fairly nasty premium biased against our position, and we were in the red on the day at that point, right around here. Actually, a little bit before that, we started to creep into the red on the entire day. Now, a few members began to actually sort of panic. They were asking, should they exit? And I completely understand where they were coming from because we were going from a green day to a red day. But we were able to remind each other to just follow the rules. Remember, the phalanx is a set of rules, and if you just follow the rules, you'll be able to take advantage of that higher expected return. So everyone did stay strong in the trade, and everyone was able to exit for a profit, and we all met our goal for the day. This serves as a reminder. I've taken advantage of every statistical edge you could possibly take in this strategy. Have you ever seen the movie Moneyball with Brad Pitt and Jonah Hill? I love that movie, and if you haven't seen it, I highly suggest it. It's very entertaining. But in that movie, Brad Pitt plays Billy Bean. He's the GM of the 2002 Oakland A's team. He meets Peter Brandt, played by Jonah Hill, who turns him onto a new way of thinking about scouting a team and playing that team. They noted that over any given season, there was a good amount of predictability in baseball. And if you can lock in on that predictability, you can actually have an edge. So they implemented a set of rules for their players to follow, like no more stealing bases, because statistically speaking, their expected return, or games won in this case, would actually diminish in the long run. They also said no more bunting the ball ever for kind of the same reason. They, of course, had to play within the boundaries of the game. They couldn't break any rules. They just analyzed every aspect of the game and they were able to figure out what actually worked and what didn't. And that's what I've done with the strategy. I've kind of moneyballed the heck out of it. That's really all the failing strategy is. It's just a set of rules that give you, the trader, the highest possible expected return within the rules of the game, of course. That's it, nothing more. I don't want to ruin the movie by telling you what happens, but just go watch it. Believe me, it's absolutely fantastic. Now, I'm not a big baseball fan, but I did, of course, spend some time geeking out on the math behind the concept in the movie. And for me, that's fun. Anyway, so I guess tonight you have three assignments. One, go watch Moneyball. You'll be happy you did. Two, go to down2trade.com to find out how you can become a member of the Down to Trade room if you haven't done so already. You'll be even happier that you did that. And three, hit that like and subscribe button down below and give us that big thumbs up because apparently YouTube will be happy if you do that. That's really it for today. Obviously, if you have any questions, comments, or concerns, feel free to hit us up at down2trade.com. Other than that, I really can't wait to see you in the room. Take care and happy trading.